to you free of charge via email. The telephone number 1-866-623-2002, 1-866-623-2002. We'd be happy to send out our free weekly newsletter via email to you free of charge. If you'd like to learn about investing in precious metals, there's only one company that Harold recommends you use. That is Worldwide Precious Metals. Their website is wwpmc.com, wwpmc.com. The telephone number 1-866-623-2002. The fundamentals have not changed in precious metals. In fact, I found this quote during the week from William Hague. He was the UK Foreign Secretary in 1998. They were debating back then whether or not to be a part of the EU. They eventually did not, which is very lucky for the UK, even though they've had their problems. He said, the euro area is a burning building with no exits. And the truth is, that is more true today than it was back in 1998. And that whole situation over in the Euroland has not changed one bit. The United States, according to Jim Rogers came out this week and said the U.S. has more serious problems than Europe. Global markets have been whipsawed in recent weeks as uncertainty over Europe's debt situations persisted. But Jim Rogers says the U.S. economy has more serious problems than Europe. Europe has a few bad bankrupt states. So does America. We've got Illinois, which is bigger than Greece. We've got California. We've got New York. You know, there are pretty big states that have serious economic problems. We have pension plans in America that are terribly underwater, he told CNBC. According to Rogers, the U.S. has deep structural problems, and in fact, they have higher debt than Europe. Europe's got some bad problems, but the entity as a whole is not as nearly as deep in debt as the United States. They don't have a huge balance sheet of trade deficit like we do. And Rogers said the United States is obviously facing a day of reckoning. Nouriel Roubini came out this week and said the United States is in the throes of an economic contraction. And a lot of people believe that the whole world is heading for another recession. Ben Bernanke, believe it or not, I don't know if he was drinking something, but a little bit of honesty from Ben. The unemployment situation in the United States is a national crisis, in which leads me to believe there will be QE3 at some point. He came out on Wednesday and said the central bank might need to ease monetary policy further if inflation or inflation expectations fall significantly. So it would not surprise me at some point if we see QE3. On the gold side of things, some great quotes from this week. Found something on CNN Money. Gold is up over 95% from the beginning of 2007 when it traded near $800 an ounce. Meanwhile, the S&P 500 is down 22% during that time period. Robin Griffiths, he was interviewed by King World News, and this is a little snippet. We have the full article in our newsletter. He says the main point here is gold wasn't in a bubble, and it hasn't burst. Earlier, when the price was $1,900 an ounce, it was, in technical terms, overbought. It was too high too soon, actually trading 28% above a sustainable trend in his mind. The only slightly surprising thing is that it fell back to trend very, very rapidly. Also, Jim Sinclair came out this week and said, and Jim Sinclair is somebody I watch very closely along with Harold, this is a repeat of 2009, actually even more extreme readings in 2009. We are severely oversold today. Anyone not buying here does not believe in the fundamental story. In my opinion, this will be a huge entry point when we look back in 2012. And there are two different articles that we have from Jim Sinclair in the newsletter that are must-reads. Mark Faber said, I'm not selling my gold because I think in the long run they will print money. Stuart Thompson said, I don't sell gold bullion in size to buy crap. Crap is a bag of U.S. dollars that pay anything less than 8% on a 30-year U.S. T-bond in my world. Also, Dick Poon from Horalius Limited. They specialize in investing and obviously keep an eye on gold. He said gold's recent price declines have been because other markets are falling and some investors have to sell their gold to meet margin calls. The debt situation in Europe hasn't changed, and as that goes on, we continue to see strong demand for gold, which will keep prices supported. Goldcore out of Ireland said this week, gold and silver were caught in the headlights of the risk-off juggernaut. The carnage was not helped by a poorly timed margin increase out of the COMEX and Shanghai Gold Exchange. The fundamentals underpinning gold have never been sounder. The correct price for gold is a matter of interpretation, but it's fair to say that the recent price moves in the metal have nothing to do with the change in fundamentals. Indeed, the selling activity was a mass liquidation event that affected almost all asset classes across the board and benefited the U.S. dollar as investors went to ground hiding in cash. There was an interesting article from Dan Steinhardt that we have in our newsletter, and I'll review it very, very quickly. We have about 2 minutes left in our segment here, Harold. He said, what happened to gold? He blamed what happened partially on margin hikes, the disappointment in Ben Bernanke, his announcement a couple of weeks ago. People wanted QE3. We didn't get it. We got the twist. Also, hedge funds, September 30th marks the end of the third quarter for hedge funds. They were booking profits. He also said that basically with gold, you had a situation where it was oversold, and people decided to obviously get out, and it caused a liquidation. But he says gold is not in a bubble. He also does say that right now the dollar is a safe haven. He summarizes by saying, overall, the recent sharp correction in gold was undoubtedly caused by several factors, including the ones above. Fortunately for us gold investors, all of these factors have one common characteristic. They have nothing to do with underlying fundamentals. Debt is still crushing the developed world, and money printing is still the favored solution. As long as this dismal reality remains true, gold will continue to rise. Well, short-term gold prices can swing because of such factors as margin calls and quarter ends. In the long run, these factors are inconsequential. The secular bull market we've experienced in precious metals for a decade remains firmly intact. And Harold, we have about 30 seconds here. I think when you get the newsletter, and I really encourage people to get it, 1-866-623-2002, call that number. We'll send it to you. It's going to explain what happened this week in the markets.
You bet. And it's extremely important. Knowledge is king, and you need to learn from these type of situations so we don't repeat them. And again, I'm very bullish on gold and silver. Again, very concerned about the world economy. And again, it's not only gold and silver that we need in order to get things done, but it's certainly a major part of it.
One thing that I found this week, and we have it in the newsletter, in 2012, about June 2012, that Pan-American Exchange is going to be starting in Asia for precious metals. And that means that the COMEX will have some competition, and they really believe that that will be a positive for the metals. One thing I wanted to mention is that a lot of what we've seen is paper markets, paper futures pushing the price around. Physical gold and silver actually has been selling very strong from what I've been reading around the world. To invest in precious metals, the telephone number 1-866-623-2002. Call that number for our free weekly newsletter via email as well. The website is www.pmc.com. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on September 30th, 2011 at approximately 9:15 in the morning. That is Mountain Time, 11:15 Eastern Time. The radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. As Harold and I were just saying off air, we've been doing the show together, Harold 10 years, me over 9 years. We've been through, obviously, all the incredible ups in this bull market. And we believe that the fundamentals have not changed and the bull market does continue in precious metals. But we've been through all the ups and the downs, and we don't like the downs. We don't like it when people lose money. But the truth of the matter is that As Harold has said, the trend is your friend, and we're in a long-term bull market for precious metals. If you'd like to receive our free email that we send out via email every week, our newsletter, the telephone number 1-866-623-2002 to receive our free weekly newsletter via email. And you can call worldwide there at 1-866-623-2002, their website, www.pmc.com. We're going to talk about diamonds, as we always do at this point in our show. Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. Our featured diamond of the week, and this week's diamond, and it is a beautiful, beautiful ring, is a very rare 3.01 carat radiant cut fancy purplish pink. As you can see, it's been set in a ring. When you see the picture on Harold's website or in our newsletter, you'll see the ring. It is stunning. Pinks over a carat are extremely rare. 3 carats makes this diamond a masterpiece of nature's art. This diamond ring is like a museum piece you would normally see in a royal jewelry collection. It's a must-have for serious diamond collectors and investors. It is simply stunning, to say the least. And you can go to rarecoloreddiamonds.com and take a look at the featured diamond of the week. You can see it in our newsletter. But, Harold, now is a time where people are looking at diamonds. Diamonds aren't plunging every day like the stock market, and they have done very, very well during these times of turmoil.
You bet, Randy. Again, the diamond market, especially the rare color diamond market, is actually not only holding up extremely well, but it's actually setting records. The more volatile and uncertain these financial times come, investors go to safer assets. And again, the diamond market has been that market for centuries. And basically, if you look at the track record of certain diamonds, yellow flawless diamonds, argyle pink diamonds, those diamonds do extremely well just on their own. They go up by 25% a year, but times of high inflation and world uncertainty, these markets can actually do way better than that. In fact, while markets are plummeting all over the world, stock and commodity markets, auctions going on around the world are seeing diamonds hitting record prices. So again, with the uncertainty in the currency markets, in the stock markets, in the commodity markets, and in the world markets in general, to own an asset that is private, portable, hidden, and does not drop in value is a very, very important asset to own, and probably never more important than it is right now. Because, again, there's never been more uncertainty in the world than there is at this particular point. And, again, a rare colored diamond can not only get you through these difficult times, can help you profit tremendously, and that's why we recommend this market to you. There are several different types of diamonds that are available for investment. I'm going to concentrate on 2 of them, because I think these 2 classifications have the greatest opportunity for profit and for safety. But the first thing that you should notice and know that there is a huge difference between white diamonds and colored diamonds. The rarest of all diamonds are red diamonds. There's very few that have ever came out of the mines. But the one thing that you should know is that all diamonds are compressed carbon. And what turns a white diamond into a colored diamond is minerals in the ground. For example, what makes a diamond yellow or green is nitrogen in the ground. What makes a diamond blue is boron in the ground. So when you take a white diamond and a blue diamond, for example, and put them side by side, you could have a 1-carat white diamond and you can have a 1-carat blue diamond. They both may have come out of the same mine. They both came out of the ground. They're both compressed carbon, but one had boron in it and one doesn't. The difference in price, a 1-carat white diamond can sell for about $2,500 a carat. A 1-carat blue diamond could sell for as much as $2 million a carat. They may be the same size. They may be the same clarity. They may have similar factors, but just because that diamond is blue or red or pink or yellow makes it far more valuable than any white diamond. So that's the first thing, is that we only concentrate on the most valuable of diamonds, which are colored diamonds. Let's start off with yellow diamonds, because again, there are a lot of yellow diamonds available, and most of them are flawed. In fact, probably 99.9% of them are flawed. And there's nothing wrong with having a flawed yellow diamond if you're looking at it as as a ring or a piece of jewelry. And they will continue to go up in price because yellow diamonds do go up in value. But it's the internally flawless diamonds that you want to own. Those are the very best. There are no flaws. They're, in most cases, perfect diamonds. And those are the diamonds that have a track record. They go up by 25% a year, pretty well every single year. Back in 1980, you could have bought a diamond, a 1-carat square cut, fancy yellow flawless for $500. Now they're $20,000 if you could even get one. And they keep on going up and up and up in price. The exciting thing about these diamonds is that they never go down in value. There has never been a time when a yellow flawless diamond has dropped in price.